in Bullion market, there will be mutual fund linked to the ELSS, equity linked schemes. So there will be mutual funds present everywhere. They have their own diversification. And even if you will Google any kind of mutual fund on Google also, they will suggest you n number of performance with returns they have seen in past 5 year, 3 year. Then you have to categorize that what's your take from it. Whether you want to invest in IT pack, thematical mutual funds, because thematical means as of now we can see IT is not performing because overall there is global recession. So IT pack is coming down, it's falling down. So if we will see a overall period from here of our view is longer, so we can expect from here onwards we can see a good returns on IT pack. So thematically also I can invest in mutual funds who are having weightage only for IT companies. Second, I can invest in those companies which will be having weightage on the top Nifty 50 companies. Thirdly, on the banking sector, auto sector, even those which will be hybrid. That means 50% will be from the equity portion, 50% from the debt portion. So the returns vary because in equity market we can expect in 5 years the returns. You can see check by yourself also that in 5% majorly you can get 25% on yearly compounding basis. You can see 20%, 25% of returns in mutual funds. But if you will see hybrid mutual fund where you have allocated equity and debt both, so their returns will be pretty less. Matlab from 20% it will be, let's say, 14% over a period of, I'm saying, 5 years. But and that's also on compounding basis. But the capital erosion in between, the deduction, the fall, the volatility in mutual funds, in hybrid mutual funds will be much less as compared to the mutual funds which will be directly linked to the equity market. So you always have to keep analyzing that where I have to invest, what is my own intake, that either I should invest in equity based mutual fund or hybrid mutual fund or only debt mutual funds. There are also debt mutual funds also where we have 60 or 70% of debt based and 40 to 30% from the equity markets. So that is also available. So you have to analyze that what is the basic thing that is required to you, and accordingly you can invest. But for me, what I can suggest, what I have experienced in this period, that equity market being the volatile market, and no doubt in it, there you can see downfall also. The capital will also get decrease if you will see in a very short term. But if you will let it go, if you will let the bad time pass, you can see a very strong returns in equity market also. That's from my personal opinion, but always do your own research before investment. Any more questions, anyone?
Sir, I have one question.
Yes, please be louder. Yeah.
How you would value a company?
I could not get you.
Sir, can you explain how you would value a company?
How you would value a company? Okay. See, basically we have to do the, you can see that there is ECG analysis, correct? ECG is economy, then, sorry, ECG is not. You have to see the economy first, then the sector second, and then the industry. So there will be a proper structure for analyzing any of the company. First, you have to see overall economic database, that which country is having the potential for investment. So as of now, I can see that overall global leaders are having very positive feedback on India, as we can see a strong growth perspective from Indian markets. So economically, India is very standing at a very strong position for at least 10 to 15 years from here onwards. So first thing that you should start looking for the good companies or good sector in the same country. So as of now, what we can see that people have started moving. What is the overall life structure has been changed. Now we people are very much dependent on, first thing is technology. Second is power, because now we know that substantial power is changing from non-renewable to renewable resources. So that will be having a very much strong future in coming period. Third, now as we have moved towards the technological advancement, we are very much dependent on ITs. So IT will be the third companies which will be having a strong presence. Then the EVs, because now we people have started investment our own money into, or not only in typical conventional petrol diesel car, but also on the EV vehicles. So that will be having potential. Now everything related to these things, everything, whatever part you use in EV, so battery, lead, graphite, every single company related to the tires, every single thing that is associated with the companies, which is directly linked with the constituent of the company, that should be having a strong gain proportion in equity market. So we can even categorize those things, that for battery, for metals, for lead, for tires, for that means for rubbers. So there will be a number of things that will be taken care from just one car, so that you can take care, and accordingly which are the top leading companies, because there you can see what is the PE ratio, the industry PE ratio, and the company PE ratio. The industry PE ratio, let's say, is around 20, and the company PE ratio is near about, let's say, 50. So that there has been a lot of gap between the PEs of both the industry and company. So whatever companies, if having this is one parameter. So whatever company will be having near about the PE ratio with the industry aspect, that will be having a strong expectation, a strong potential. But again, this is one of the parameter. Then we have to overall see that what is the EBITDA margin, increase in EBITDA margin year to year basis, and how is the revenue is getting growth, revenue is getting moved in a potential potential expected year. So that is something what we people have to keep on analyzing. Again, on that basis we can find good fundamental companies. Then for entry and exit, again you will be dependent on the technical levels, that at what levels we should enter in the market, and at what levels we should exit from the market. So there will be a combination of fundamental analysis. First thing, your common review, that what is your review from the market. So that's very much important, because we people have to understand that what's the future of the market, and accordingly we can invest in those sector, power sector, IT sector, automotive sectors. Infrastructure is always in a very strong phase, because India is a developing nation. So infrastructure is always very much higher in India. So infra related companies. Then what are those companies? What are the industrial PE, and what are the companies, top leading companies, and where the PE as compared to the industry, whether it is on a higher front or a lower front. If it is on a lower front, that's a very positive thing to look upon. And again, if I have to see the overall ROI also, ROI is, let's say, more than 10%, 10 to 15% is the ratio, then it is considered to be a very strong company. So you can look for those companies on your own basis. You can see all these data. There are n number of free websites where you can use these data and analyze by yourself. There is a website called Stock Mojo. So screener.in is the first website where you can check the data. Second one is a Stock Mojo. All these websites are free, and they provide all the information, so all the annual report, because whenever the company is listed, they have to publicly display the annual reports, that what is the expenses, what is the revenue, what is the EBITDA margin, how much is the PE ratio, what is the industrial PE ratio, what is the PE ratio for the peer companies also. So you can see all the data, and from there onwards you can select the top stock or top companies based on fundamental, and then you can move towards Trading View. Trading View is a free website where you can see the technical charts of the companies which are listed in equity market, and from Trading View you can do the analysis. You can set up your own technical indicators, and from there onwards you can try to find out the probably the strong entry and exit point. But I again say that these all things are something that you have to do on your own. If you are not very much into the equity market, and if you are not from the financial background, then you should always take a advice of a person who is in the market, because they will be the person who can explain you, who can guide you for a betterment, and they can give you a proper phase that what kind of market you should invest, and how much money or how much potential that you can expect from any of the stocks. So I hope my answer is clear to you, I guess.
Thank you so much, sir.
You're welcome. So
some
Sir, hello.
questions on the chat box I could see. Maybe you want to summarize them? Yeah, please.
okay, what happens to Paytm downfall? Will they rectify back? Okay. How to invest for an IPO online? Sir, in equity market, there is market named gray market. Can you explain how the gray market will work? See, very smart generation this is, because once we people start talking about gray market, because gray market is something where even matlab, there has been analysis, and what we people have to observe is that not only after publishment, after IPO, a company is start or is present on the secondary market for transactions, but even pre-markets, what we can say that the unicorn companies, the companies which are not listed but having a very strong potential, because Paytm before listing was a very strong company, because the in the gray market it was trading near around, I guess, 3000, 3200. I am very much sure about the price, but once it get listed, because of the revenue which was on a negative note, profitability was negative, year to year expansion was there positive. Yes, why? Because the number of investors were very huge. The time the locking period broke, because in IPO the QIB, the quantitative investment planning, what people have does, the institutes that invest in those company, they come with a time frame that by 6 months of the listing in the company after IPO, we should not exit the company. We will not exit the company. But once the company, I am telling about Paytm. So once the Paytm was listed in the on the stock exchanges, that was on a very discounted note. Why? Because people have known by then that this company is not a revenue churning company. This company is more on the investors inflow, investors cash inflow. On that basis, this company is generating or is developing or is having its own growth. So that has created a very negative impact on the market, and the prices have started falling down. Then again, once the 6 month tenure of has completed for the institutional investor, they also exited from the counter, and that's why Paytm has fallen drastically after that. But as of now it has came to a fair valuation. Fair valuation, as in terms of, we can see from the markets that from here onwards we can expect it to either consolidate or might be slightly move upwards. But that is again, the fundamental of this company is not very aggressive or not very positive. So we are not expecting very strong move in Paytm as of now. So for trading purpose, yes, one can find out opportunities in Paytm, but over a longer duration for investment, it is again under the radar, because still we don't find any positive profitability, because there are n number of platforms also that has came into picture now, and they are also providing the same kind of services. So there is no very much monopoly that we can see in Paytm as of now. That's why we are not expecting very strong fundamentals for this. Then second question is how to invest in an IPO. IPO is something where a company comes for the listing or comes for the capital requirement from the primary market, from the general public. So here you can have your own trading account. You can log in just there and apply for whatever IPO you want to invest. That is pretty much simple, because even from mobile app, you can apply for IPO online. So I'm not going to explain how to do that, because I'm not an advisor, but you can do it from your mobile app. Gray market is the market where we people, not we people, but we people analyze that how people who have invested in this company, the main promoters and the people related to the promoters, those people, institutions which are having a very positive feedback for the companies. So how these people trade after the IPO date has been launched. And once it has been launched, we can see a lot of movement in the gray market depending on the demand and supply, because that is how we people have to analyze the psychological behavior of the market, psychological behavior of the company. That if the company is 100%, or nowadays over every company is overly subscribed 1%, 100%, 200%. But if the fundamental of the company is very positive, and we have seen that it has been oversubscribed from the number of share it required, then it might be having a positive opening, and from there onwards we can see a strong move. Some of the companies which are very positive were the DMart, Happiest Mind, recent May Happiest Mind, then Kim's is one of the company which have seen very strong listing, and after that it has rallied also. So there are n number of companies, but the main agenda for any company to move upwards is the strong fundamentals. In the bond market, when a company goes bankrupt, what will happen to the capital invested in the company? In the bond market, first thing, when the company is getting bankrupt, that will be a very rare scenario. But if it happens, your capital exchanges, the authorized person, let's say for equity market, as in the SEBI is the authorized person. So if the bond market is under government security or private company, then that will be having a surveillance, or that will be having a authority over it, that will take care of minimum investment. That means minimum for equity market, it is 25 lakh rupee that can be taken care by the authority body. So that much, there will be certain portion that this much of investment, if something goes, something wrong happens, then at least this much of capital is insured. So that's why always bond market will be having insurance related to it, so that anything wrong happen, mishap happens, there will be an insurance taking care of it. And insurance takes a heavy levy positions, so that if it does, because major of the times it does not require, but if it requires, then it will have to deploy a lot of strong, then it will have to deploy a strong movement, then it will have to deploy a strong capital. So they always take a higher brokerage as compared to the equity market. But again, that is a very rare scenario. But in equities, there is 25 lakh per individual that is secured. Apart from it, it will vary depending on market to market. Can you explain forex trading? Yes, I will. Just give me a second. How does GDP affect the market? GDP has
So Osho, can we take a short break? I think you are talking like more than an hour, right? It's so hard for you. I know. I know you can manage it, but still I wanted to, you know.
Fine. We can connect at 11 then.
Okay. You can give 10 minutes break for us so that everyone can just relax. You can also relax and have a cup of tea and come back, please. Yeah. It's very much interesting, you know. Yeah, it's getting interested now. Yeah, when it comes. Yeah. Thank you.
Thank you, sir.
Yeah. Students come back after 10 minutes. Yes.